Hey, what's up everyone? This is Silver Slayer. Thank you for tuning into this video. Gold and silver in the green, platinum and palladium in the red. Right now we see gold at $1,592, up $4.09. Silver, $16.84, up 8 cents on the day. Platinum down $3.48 to $865, and palladium down $71.75 to $2,583. Are we going to see $1,600 gold, or are we going to see $17 silver? The gold to silver ratio standing at 95 to 1, a staggering 95 to 1, which is extremely high. And yeah, I have an article from Seeking Alpha talking about why silver prices are going to be going higher. This is his thesis. This is his opinion, and he is a research analyst, so he knows what he's talking about. So let's see what he has to say. Before we start, make sure to smash that like button. Make sure you subscribe if you're new, because I do post daily videos. I'm also doing a giveaway. If you want to check how to enter that, check out the video I posted yesterday. With that said, let's jump into this article. So, why silver is going much higher? The article is also covering why I think the bottom is just about in, his favorite chart as an investment indicator, and why gold and silver fear trade may be back, and also why a recession could be imminent. Very shocking and blatant statements. So anyways, coronavirus stock market crash. Last week, the stock market fell 10%. I mistakenly believed that gold and gold mining stocks was going to work as a hedge against a stock market crash. Instead, gold sold off, as did the miners. So he's saying that he thought that gold and silver were going to have some comfort, some cushion between stock markets crashing, and that's going to help them, but it actually didn't too much. So I thought that the high levels of debt that have accumulated would induce investors to buy gold. I was wrong. Note, I have never focused on silver as a hedge because I believe that gold leads and silver follows. I consider gold to be the big dog because the silver market is very small, which is true. So what I learned this week is that gold is not a hedge for a stock market sell-off. If you want to hedge for that, then you need to be short a stock index or own a VIX. What drives gold is fear trade. But fear of what? Bonds failing. There is much more money invested in bonds than stocks, and that money is invested for safety. When the last stock market crash occurred in 2008, gold and silver crashed as well. I should have learned that what I learned this week, or I should have learned that then what I learned this week. Gold and silver didn't rally until after the crash, when the fallout began for bonds. After the crash, investors worried about their bonds and bought gold and silver. From 2009 until 2011, gold and silver took off. Then, after the markets recovered and the fear of bonds subsided, gold and silver started their 7-year bear market in 2012. The signs were there that gold and silver would fall with a market crash. The biggest sign, which I repeated over and over, is that silver has not yet confirmed a new gold bull market. Based on my analysis, it was not yet the perfect time to jump into gold and silver mining shares, silver call options, or silver futures contracts. So here's his bond thesis. The good news today is that bonds are now weakened psychologically. That means there is a good chance investors will begin buying gold to hedge against their bonds. Others will sell their bonds and buy gold. Others will buy gold instead of more bonds. In other words, the gold fear trade is likely to manifest in the coming months unless the markets do a quick recovery. I became a gold mining investor in 1991 because of my belief that the U.S. government would eventually have to default on its debt. My analysis was simple. Gold is the ultimate hedge for a massive bond default. Bonds are supposed to be for safety, so if bonds fail in a big way, the go-to investment should be gold. It's like all roads lead to Rome. All situations, all circumstances are leading towards gold. I admit that my thesis was a bit of a stretch back in 1991, but today it's becoming more and more of a likelihood. Today, most knowledgeable financial analysts admit that there is it's impossible to pay our debt back, although they use assumptions on how we will avoid a default. What they fail to realize is that the U.S. can only borrow money based on its economy. If the economy falters, then a default is inevitable. So do the math and you will see that with the U.S. is already trapped by low interest rates. We are paying $400 to $500 billion in annual interest payments and interest rates that are historic lows. With just a small rise in interest rates, we are bankrupt. Everyone knows this, and it's not a secret. Investors who hold large quantities of our treasury debt will dump it once there is enough fear that will not be paid back. Surely that day is coming. So I use the analogy of the game of chicken that teenagers played in their cars in the 1950s. Right now, Japan and China are already playing this game of chicken to see who blinks first. They are watching to see who sells their U.S. Treasury debt first. They both are nervous and know exactly what I'm writing about. One of them at this point is going to try to sell their debt. The day that selling begins, it's all over. The U.S. will have no choice but to default. Why? Because interest rates will rise. It's impossible to sell $1 trillion in U.S. debt and not cause interest rates to rise substantially. The game of chicken scenario will play out, but it probably won't be for the first crack in the dike. And the U.S. economy is busy deteriorating. No one will acknowledge this, but it's true. Politicians like to claim the U.S. consumer is strong, but that's untrue. The middle class has been deteriorating since the early 1970s. This is the first generation that is poorer than their parents. Living wage jobs are becoming harder and harder to find. Costs are increasing for housing, education, and healthcare. As a result, the middle class is shrinking. Plus, everyone is accumulating large amounts of debt. If it wasn't for low interest rates and liquidity injections, the U.S. economy would probably be weaker than Europe. So he's talking about a lot, and this is going a lot about the dollar index, about the dollar strength and the economy. And the economy is directly linked to where silver prices are headed. So that's always why I say if you can bring a chart-based analytical standpoint and mix that in and incorporate that with what's happening in the economy, you can get very, very accurate prices on where precious metals are. So here's the fear trade indicator. When you consider how big the bond market has become and the fact that a great deal of it's likely to default, then you will understand the huge upside potential for gold and silver as a correlation. I have created a fear trade indicator, which is a scale from 1 to 5 being the 5 being the highest. Today, it's at a 2.5, which is getting uncomfortable. And if it was at a 3, gold would not have fallen $50 last week. Once it gets to 3.5, gold will be running. Here's my fear trade 0 on my scale. 1 is 0 fear, 1.5 very little fear, 2 is comfortable, 2.5 getting uncomfortable, which is our current value. 3 is high. You guys can read it. 3.5 very high, 4 is extreme, 4.5 verge of panic, and 5 is pure panic. So best investment. So under this scenario, what is the best investment for the next 5 years? You could say the gold and gold miners, you would be close. And it's actually silver and silver miners because of the GSR, the gold to silver ratio. The GSR is currently at 95, which is at an all-time high. The GSR should be under 50, so you can get 2 to 1 leverage by owning silver and silver miners. Silver is an incredibly versatile metal, and there's no reason for it being this cheap. And that's so true. You know, silver is a ticking time bomb waiting to explode. Silver has the potential, and this is where we're going into the meat and potatoes of this article. You may be thinking that the GSR is of 10, a pie-in-the-sky fantasy. But every year, new uses are found for silver. In fact, currently, Chinese are adding colloidal silver to some type of sprays to fumigate the coronavirus. It seems like all new technologies use silver, which is true. You can't make a car, electric or combustion motor, without silver. You can't make a cell phone. You can't make a solar panel. Now for the good news and the reason for this article. The silver chart is currently my favorite chart as an investment indicator. First, it's been in a 7-year bear market that's created an incredible base channel. See the green lines below. That base has created a huge upside potential for a big breakout. Second, it's on the verge of its first weekly golden cross since 2009. So you can see that right here, this is what he's talking about. A golden cross, which is a smaller moving average, crosses a large moving average on its way up. In this case, the 50-week moving average is about to cross the 200 WMA. If that chart did not get your attention, I have another one that's even better. This chart's a quarterly chart since 1970s. This was tweeted by Grady, who I follow. It shows the large cup handle I've ever seen. It shows the largest cup handles he's ever seen. It unfolds it, but if it unfolds as anticipated, silver could easily reach $100 and beyond. So what do we have? We have a coronavirus that's causing havoc with the markets. We have an economic expansion that is the longest in history and overdue for the contract. We have the income levels that are growing at an economic rate. We have healthcare costs spiraling out of control. We have corporate earnings that are stagnant. We have the plethora of corporations that are zombies and not paying their interest of debt. We have a government that's debt's out of control. Finally, we are praying the Fed can manipulate interest rates, maintain liquidity injections to keep this mirage going. With that backdrop, go back and look at the basic channel for silver. Do you really think silver is going lower? I don't. I think we're just about to see the bottom. We might go down in interest rates low for 2016 to around $14.50, but more likely the outcome is we'll never get to $15. Not now, not ever again. So I think this was a very, 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 very well written article, and explains some extremely important points and really does show the reality. This guy is very smart, and I love how he incorporated everything that's going on in the economy with, this. And if you read this article and still think that silver is a dud, then you are living in another world, because this is spot on what I'm trying to say, with the several uses that silver has, with its potential, with the gold to silver ratio, how silver's a ticking time bomb with the economy, with everything, the interest rates, everything is pointing towards higher silver prices. And that's as simple as it gets. Thank you so much for tuning into this video. The link to this article will be in the description if you want to keep checking it out yourself. I didn't finish it off, trying to keep my videos at a timely manner, but the link is in the description if you want to keep on reading. There's another paragraph at the end talking about how to buy silver, but I'm sure a lot of you guys already know that. So anyways, thanks for tuning in. Make sure to smash the like button. Let's see if this video can get 100 likes. I know we can do that. Thanks for tuning in. This was Silver Slayer. I'm out. Peace.